All right, guys, today I'm going to come at you with a video called How to Trade Forex. Now, I personally don't trade Forex. If I had a ton and ton of capital, I would allocate some of my funds to trading Forex. But the reason why you are losing as a Forex trader is because you're trading it wrong. Okay? And this could go for any asset, but I'm going to show a less liquid asset that has a lot of, I guess, more like I don't know, looks like a very HFT asset, but this is the US dollar versus the Indian rupee. As you can see, it's very different from the higher volume assets, and on top of that, it also is more chaotic. However, excuse me, even though it's more chaotic, it's actually better to trade this over some of the other foreign exchange pairs. But it's with this specific pair, I would call this more of a long-term investment. And I think with most Forex pairs, you're making long-term trades. And so the issue with trying to day trade in general, but especially on Forex, is that people are trying to make sense of all this chaos. And the thing is this isn't all calculated. This isn't all the big institutions. This isn't all one institution. This is many institutions buying and selling. One of the big reasons why Forex even exists is for actual foreign exchange. Like people, I've said this in a previous video, but people actually need to convert their country's currency to another country's currency to purchase something. Big businesses have to do this, institutions have to do this, people even on small scales have to do this. Okay, and all of those things affect the market price, right? Based on the supply and the demand of one pair versus another pair, how much US dollars is being converted to rupees and how much rupees are being converted to US dollars is what's moving this market in general. Okay, of course there's traders also trying to make money off of the trends of that, but they're not day trading this stuff, dude. Okay, there is a little bit of a way. I've showed it before. But let's look at a longer term picture of this. It appears to be trending up, wouldn't you say that? It also appears to be in a very tight range right now. And if you know anything about tight ranges, they usually lead to breakouts. Like for example, here's a smaller tight range, leads to a breakout to the upside. This is a very long tight range, so I would expect a large up move resulting from this consolidation. Okay? If we go out to a weekly chart, we can see it more clearly. Okay? If we go out to a monthly chart, we'll see it even more clearly. Okay? And you'll see that if you look back at way in the past, there were periods where there was these tight ranges for months, years, just for like a couple years, and then boom, tight range, boom, tight range, boom, tight range, boom. It's a little bit more chaotic now that it's more liquid, but again, it just keeps forming different types of flag patterns and then moving up. Flag, move up, flag, move up. Some of the flags are more chaotic and get manipulated why does this flag fail right here? Because they're running stop losses, taking up inventory and then moving it higher. But I would say this is probably one of the easiest assets to trade, which is that you just buy it, but you're not really trading it. You're just buy and hold it. This is the kind of thing this is why I said it would be nice to have a lot of capital to start with, because if you had $1 million to throw at this, you could just throw $1 million in this and just leave it in there forever. And then when you retire or whatever, you can pay your long-term capital gains tax and cash out the $1 million investment for $10 million or whatever it's going to be, and then you're good to go. Right? So that's why people are trading Forex wrong. The reason these pairs move is long-term trends that are based on things like population increase, inflation, interest rates, and it's kind of about the interrelationship of those factors in both of the countries in any pair and their relation to each other. right? So the US dollar here is stronger than the rupee. Now the US dollar and the rupee are both inflating, both populations are increasing, and I don't know what India's interest rate is, but I'm assuming that it's positive, considering I think Japan's the only country that had, past tense now, had a negative interest rate policy. I don't know which one's higher. Actually, I'm going to pull it up on my phone right now. Okay, it looks like India's rate is at 4%. And I'm sure, as you know, the United States rate right now is, I think, about 4.5%. So they're both pretty similar. U.S. dollar has higher interest rates, though. That gives it a bit of strength over the rupee. I don't know what the inflation rate of, let's see. I don't know how to make it actually look right. But I think that India's inflation rate is higher than the United States, which also weakens its currency against the US dollar. So if their interest rate is lower and their inflation rate is higher, then their currency is weaker. Meaning that since the US dollar is the first three letters in the pair, that's up means US dollar stronger. How easy of a trade is that? Okay, but of course it takes patience because this is a long-term hold. But think about this. Think about people who were buying this asset back in the 80s. Okay? There's people who've been holding this since the 80s. I mean, you may have to move different brokers as times change, whatever. But there are people who have been betting on this continually for decades. And I bet they've made an absolute boatload of money. And then the day traders lose all their money because they can't see these long-term trends. And they're trying to find patterns within the low time frame chaos, which is a fool's errand on an asset like this, right? So let's go to a different Forex pair, more popular one, right? We're looking at the long-term trend of this. Okay, so you tell me, which one would you rather have to figure out, this one or the rupee? Which one do you think looks easier to trade? Takes 5 seconds to figure that out, right? The rupee. You should be trading US dollar rupee, not euro USD. Why? Because the euro and the US dollar are both relatively powerful currencies. So it's going to be hard for one to completely engulf the other, correct? So it's gonna be more chaotic, as you can see, right? The power struggle between the euro and the US dollar is a lot less certain. It changes. I would say overall, well, this has an uptrend. So this overall seems like it's suggesting that the euro actually is stronger than the US dollar in the long run. But that doesn't mean that it's that much stronger. As you can see, you can have 15-year downtrends on the euro, right? And there's bull and bear markets within that. So this is a lot more chaotic. And so this does tie into other teachings I've had, which is that the easiest way to make money in the financial markets is to identify assets that have clear trends and then bet on those trends when the assets are moving against those trends. So for example, back with the rupee, what does that look like here? That means that during the early 2000s and so from like the dot-com crash through the financial crash, you would have been buying the rupee in large amounts. And yes, that is a 5-year downtrend. Can you weather that? This is why trading is hard and asset management is hard and all that stuff, because you have to see the big picture. Okay, can you bet on this thing? Who was smart enough to bet that this thing would keep going up in the long run when it went down for 5 years? I mean, it was kind of up and down, but like trended down for 5 years. As soon as the United States starts coming out of its financial crisis, or two financial crises, the dot-com crash and then the financial crisis, the United States recovers from those, boom, boom, right? So who would be smart enough to see that? Okay, but I would say this asset has a very clear trend, and I would bet on that trend if I were you. Not financial advice, but that's what I'm saying. Okay, but so this is why you don't trade this pair, because where's the edge? It can flip on a dime. This thing could go up back to here, or it could go down to here. Who knows what it's going to do? Okay, both these are strong currencies. So you have to identify, if you're trading Forex, you have to identify an explicitly weak pair or weak currency and a strong currency, and then bet on the strong one against the weak one, right? So easy and simple, right? GBP, JPY. Again, not exactly the easiest to determine trend with, right? Because right now you would say, oh, well, it looks like it's actually trying to trend up again. We'll see. Maybe it is. But as the yen just increased their interest rates from negative to zero, that could indicate that their interest rates are going to come into the positive, in which case the GBP might weaken against the yen, right? Like I was saying, like I think the yen could possibly strengthen against the dollar as well. We'll see. I don't know that for sure, but not as easy to trade, right? Take the easy ones. Okay, take advantage of the easy ones. Take the fresh meat, the low-hanging fruit. Okay, that's the best way to win in trading. Take the low-hanging fruit. So what does that mean for me as a futures trader? Ignore these pink lines. Those are just Michael Jenkins stuff. Now, this isn't the full NASDAQ. It actually existed before this. So don't let this downtrend deceive you. Where do you think this thing's going to go? Okay, when over a year ago, I was telling you this thing was going to be pushing for all-time highs soon, and then it did that over the course of the next year. That doesn't mean I'm a genius or anything. It doesn't take a rocket scientist to figure out that the long-term trend of this is the smart way to bet, and that's what I did. Okay? And the best time to bet on the long-term trend is when a short-term trend is moving against it, right? That's like blackjack, true count. Okay, think about this. If you pick a long-biased asset and there's a bear market, a recession of sorts, a crash, that's when the count is going in your favor, and that's when you bet long. You can also be betting long here and here and here if you want, but I would say when it really goes against you, that's when you have to quote-unquote catch a falling knife. Why are you catching a falling knife, though? It's not just on any old asset. You're catching the falling knife on an asset that you know has to eventually push and break through all-time highs later on, down the road, right? During the financial crisis, the smart people, the smart money was buying this knowing that this high would be left in the dust one day, right? So anyway, I hope that's enough information for you guys today. Take care.